The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on the 16th of November, Wednesday. And we're looking at the Dow up 31 to 33,623, kind of stuck in this range over the last couple of days. 33,900 has been very strong resistance. Actually went all the way to 33,987 yesterday, then dropped over 400 points. So the fact that it's even up at this particular time is impressive, and that's what I've been saying. We're waiting for some kind of a pullback to add to our long positions in the Dow. Meantime, back at the ranch, look how good that weekly chart is. Well, this is not even halfway into the week, so we can't talk about it as if it's closed on a Friday at 4 o'clock. But this is a very important pattern that we're looking at. And let me just move this over here. This is the weekly chart in the middle. So I'm going to pull that across. Here we go. So we're looking at the weekly chart for the very first time since the first big rebound to start the Chapman Wave inside track repellent zone back in April. This is the first time that we're actually seeing the width of the MACD so wide. That means the histogram in the weekly chart has gone to the greatest extension. That's the vertical line right there, as the distance between these two moving averages has expanded. The stochastic is still not at 80%. It's under 80%. It's 73% of the weekly chart. At the middle of last week started to cross positive, and we're now positive in the 9 period over the 14 period moving average. It's done that before, also with a little doji candle, a couple of times actually, and then reversed down. So if the stochastic cannot get over 80%, that's going to be a big negative. So we're watching that very closely. And look at this. You got quite a bit of support. You can go all the way down to the 32,600 level and still be inside the how can I call this? Inside the zone, and that'll still be a positive. Going under it, going to the 32,400 level says, uh-oh, watch out, you're mimicking all the others. But in this particular instance, there are some positives that I like, in the sense that on a purely technical basis, it's getting closer and closer to 2 weeks out of 3 of closing above the high of August at 34,281. We've still got a long way to go, almost 900 points, but that's what we'll be watching. If at any point, now, I haven't spoken about this for a while. I did talk about it last year and the year before. And I mentioned it, I know I had mentioned it in one of my sessions just briefly. I'd said that if the Dow, I'm using the Dow as an example, if the Dow is able to hold to the yearly high going into the end of October, the beginning of first week of November, and we've already gone through the first week of November, usually the market closes the year closer to the highs than the lows. In fact, very close to the highs, if not at a high. So this is just my own observation based on the Dow. So the fact that here we are into the second week of, let me do this correctly. This is the 1, 2, it's into the third week of November, the second full week, but the third week of November is a very good sign. It's a very good sign in the sense that you now have a lot of, you saw the last 2 days where the lagging indicators caught up with the Dow. In fact, they were leading. The NASDAQ yesterday led to the upside. That's a good sign. And I'd like to see a continuation of that rotation. So in the meantime, back at the ranch, let's just quickly do this. S&P, I've got a bunch of questions left over from yesterday and today, early morning, that I want to get to. S&P stalled right at the 200-period exponential moving average. Why is that important? Why is that important? For anyone who doesn't listen to me in terms of always talking about the 200-period moving average, let me just remind you how important it is. Look, there was this whole period back in August where the price was going higher and higher, but it couldn't hold above the 200-period moving average, and it stalled, and it came down, and that has been a repellent. The closer you get, the more it becomes a potential magnet for the price. So this is the magnet. The magnet is good. The stochastic is at 89%. That's good. The on-balance volume is not very good at all. 9-period is over the 14, and we've stalled right at the 200-period moving average for the S&P. Let's look at the QQQ. Peak D, we're always looking at the Chapman wave methodology. We're looking at a D to see whether or not it can go higher. That's where you watch it closely to see whether or not there's momentum that can build to go to E, F, and G or whatever it is. But D is where that's the target for a buy signal to buy mode. So it's reached the D, and now it's pulling back. You had left side, right side price time match. It went there exactly 2 days ago, and now it's stalling a little bit, but everything else is very positive. MACD is good, stochastic's good, 9 over the 14. I just don't have the momentum of the upside in the Qs. To me, that's a negative, and I always want to do this. I want to match the SMHs. SMHs are way stronger. Isn't that interesting? That's the market vector semiconductor ETF, trading down 6 today at 219.37. It went to a leg F, possible peak F, because it's gapped down at the 200-period moving average. I mean, was it resistance back in July, August? Absolutely. When it stalled at peak D and the Chapman made the fourth highest peak, 247.06, look what happened. Pulled back very sharply, right? 247 down to 166. I would say that's very sharply. And now it's come back very nicely. It's not, maybe it's helping the QQQ. Don't forget the Qs, especially the NDX 100, they have a lot of stocks that were just decimated, 80%, some even 90% declines. So with that said, I like the action here. Some people had asked me, is this the time to take some profits in our semi area that they bought? We've not done that this time. We usually try to get the 3 times long SOXL. Some people did get it because I said I like the action here. They did the Chapman wave methodology for their own needs, and I liked it. And today I said, you know what? I would take some money off. If you have a choice, you can keep a little bit, or you can. One person in particular is going away for a week. I said, hey, when you're away, I've done this before. Where my biggest mistake years and years ago, was that I'd done very well in different things, and then I decided to go into options. And I was heavily involved. I mean, I did it almost blindly. I was very involved. I remember I had Exxon. I had all these different oil stocks, and I don't know if it was Raytheon at the time or Honeywell, and options. And then I went away to visit family in South Africa. I had no contact with the market whatsoever. Those were the days where I didn't keep my newsletter going for that particular time. It was, I believe, 2 weeks altogether. And believe me, when I came back, options on a minute-to-minute basis, you got to watch them, let alone, well, it depends. It's big options. Well, needless to say, at that particular pile of money that I put in there, I had to start over. It wasn't a good idea. So I'm just saying, you want to be on vacation? Be on vacation. Don't have to worry about the market. Just be comfortable. I'll be back in a moment. Dow's up 9, S&P's down 2.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, let me just finish drawing this here. You know, I like to draw these patterns. The lowercase h goes to a lowercase m, and then you got to be very careful because if it takes out the left side low, that can go 1-to-1 to the downside. So this was a peak C, probably a peak C minus in the next few minutes, but I'll call it a peak C. This is the 1 minute E-mini chart. I said I'd do quite a bit more of this over the next few days. And look, this is my target. Actually, I should show you this first. Let me just do this here. Quick showing of some of the techniques. So within the look how beautiful the arch formation can be if you're able to find the midpoint and see whether it makes the arch formation. We're going to get a big test of this this is the 1 minute chart, in the 10-minute chart, because if the 3970 level gets taken out, then there should be a time frame that says by 11:30 to noon, we should be testing 3960. This one was a little more difficult because the match, look at that beautiful left side, right side bar symmetry over there. And that's in the 10-minute chart about 4:30 this morning. Of course, I wasn't up, but I did my own analysis. And I showed the rectangle here. And now there's a chance that we can go all the way back to the 3960 level, which was at about 1314. So that's about 1:30 yesterday. That's where we had that sudden sharp pullback. Remember, there was that news about the Poland attack. And then what happened was, went to a peak D, went sideways for a long time. Now, this doesn't mean to say it has to happen. I'm just saying that in this particular pattern, what I am watching is that if this is the Chapman wave inside wedge target support line, because it's pink and dashed. And that says your first support, well, it depends when it happens, of course, right there. I just moved it by mistake. I grabbed it. There it is. The first support will be over the next, going into 10:30, about another 10-15 minutes, will be the 3969 area. If that's taken out, then there's a really good chance, and the stochastic's already at 13%, so it's ready for a little bit of a bounce. Then there's a chance that you can see left side, right side price time match. Now, I love to go to one that's very obvious. This would have been the obvious one to me. But when I was doing, I said, with all this activity here, with the fact that they're still buying actively being demonstrated much more than selling, because every little pullback gets, even last night, every pullback got bought. So we have to see something happen that's really a decisive move. So let's give it time. So instead of going to this low at 10 minutes past midnight last night at 39.55.50, that was this particular arch low, and a very obvious point to use left side, right side price time match, I decided to move it to a particular candle. There's always a particular candle I try to find. And if I find that, I say, okay, that gives me time. So here we are, we've got time, and it just says somewhere around between 11:30 and 12:15, there should be a test. If 39.69 is taken out, there should be a test of the 39.60 level. That's all. That's all you can do. But it also says, watch the stochastic at 13% because it's flattening out and it's trying to turn up, and that gives it a little bit of impetus to the upside, and the histogram in the MACD is improving just a fraction. So those are the things I look for. What would be the trade I'd be putting on right now? Well, the trade was when it crossed negative, when it turned to pink. The 9-period moving average slipped under the 14-period, and that was way back at about 6:15 or 6:20 this morning. In between, we've had a lot of action in the 1-minute chart, and that's a very different kettle of fish. That is saying I'm making lower lows and lower highs. I keep fading at a peak C, and I keep coming down. So this is now the major support level that I'm looking at. Well, it depends what time, but in the very short term, it'll be this low right here of 39.72 that was made at 9:58 this morning. We'll see what happens. All right. So that implies the short position is in place, and now you just have to handle that short position. So the IWM got repelled to the 200-period moving average. You can see why I'm looking at this. I can go through dozens and I just early this morning, I went through the Dow 30. I went through a whole bunch of NASDAQ stocks. It's just incredible how many are in leg D, E, and so many are at G/C. Very overextended. That doesn't mean to say they have to crash. It just says they need to pull back a little bit. All right, so I had questions. I want to do this right now. I can't remember if I finished the crude oil. Yeah, crude oil is under the 200-period moving average. It's just been hugging that line no matter how high or how low it went, keeps coming back to it. My suspicion is that if it cracks under 83, be real careful because 79 could be a very quick trip down if that's the case. Looking at the TLT, so the TLT is still looking very good. That's bonds are still looking good. In leg C, doji candle, I'm suspecting that this high that was made right here of 100.90 is kind of where I'm looking to see, does it start to stall there? Certainly it's got a lot of support in the 98, 90 area, but I am seeing improvement. The MACD in the weekly chart hasn't crossed positive yet. That would be the first sign that there's some kind of upside activity that can even take you to 102.48, which is the 14-period exponential moving average in the weekly. Monthly looks just horrible. So it's the daily that counts at this particular point, and there's a fight between the cup formation and the arch formation. But the left side, right side price time match suggests that by the 22nd is Tuesday, this coming Tuesday, we should be testing the 100.90, maybe 101, maybe even testing is that a minor gap, 101.62 and 101.53? No, that was filled in. So somewhere in that, somewhere at 100 and 100.90 to 101.30. So far, bonds is going up, even if it's just very close to some kind of pullback. The dollar, let's see, dollar over here, DXY. X. There we go. The dollar is, in fact, holding above the 200-period moving average. That's really, I didn't show you this, and I said I'll show you this today. Oh, so with the TLT, yes, if you wanted to take profits, you have options. Options gave, even holding here, gives you the premium is at its best over the last couple of days. I would definitely say yes, if it's options related, yes. If you want to keep one or just a tiny little bit, because there should be a pullback in the leg D, that's fine, but definitely do take profits. The DXY, look at this left side, right side price time match. I'd drawn this in from 104.64 back on the 10th of August, and I'd made this peak D at 114.78 the 28th of September as the left side bar symmetry, which should take you to today. And the low so far was yesterday at 105.34. I would say being less than $1 away after August, September, October, November, after 3 months worth of trading, shooting all the way to 140.78 is really nice. And look at this. Oh, I didn't join it. I should have joined it. And the Chapman inside track support level, it didn't get down to it, and that's going to be very important because right now the dollar is attempting to bounce a little bit off the 200-period moving average. Dow's up 44. I'll be right back.
If you want to take advantage of the sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Let me just finish this. This is the dollar, Canadian dollar ETF. No, this is the there we go, A, B. Nope, B is over there. There's C. Yep, in the weekly chart, it made a peak D. It's pulling back. Yeah, so basically what we're looking at here is the USD. I've got it as USD CAD. Some people have it reverse CAD USD currency pair. Made it leg D in the monthly chart, pulling back some. USD JPY. That is. Did I type it in the wrong place? Probably did. Let me just do it over here. USD JPY. That is the. Oh, this is what we're looking at now in terms of the dollar yen currency pair. Made a peak E in the weekly, got repelled in the Chapman wave inside track repellent zone. The left side, right side price time match says that by the 21st of November, we should be testing the 135.81 level that was made on the 23rd of August. We'll see after that peak D top and the beautiful arch formation. And there's a Chapman wave inside wedge target support line. So yeah, so far in the MACD's week, stochastics week, the thing I'm missing here is, did I do the same thing with the dollar? Yes, I think I did. Yeah, I did. So the dollar, of course, it did that left side, right side price time match, almost got there within less than $1. Now it's trying to find some kind of support. What am I missing? I'm missing, what was I going to do today? Oh, the VIX index. VIX index is still under the 200-period moving average. Had a big spike yesterday on that sudden scary news about the rocket. But most importantly, what we're looking at is as long as it remains under the 25-30 area, so 24.20 right now, that gives you some kind of support in the in buying of the market. I didn't do a left side, right side price time match. I meant to, but you can see right here that it's gone from this level right there, from there to there, and now we just have to match it up. That was a double top, and it was green. This is pink. That comes there. Where does it go to? Unbelievable. Look at that. 2 within a day. It made it underneath within a day. So that's achieved its function there. That's the VIX index. So now at this point, it's ready for at least a little bit of a bounce, maybe just a bounce, nothing more than that. I wanted to look at crude oil. I think I did it. Okay. So crude oil is pulling back, but is holding the 200-period exponential moving average. So a question came in about rig. I did it yesterday or the day before. I said, I'm suggesting that no shorts, but if you're looking at these, anything to do with oils, and that includes the XLE. Let me do the XLE together because the XLE is the S&P Select Energy Spider Fund. Getting a little bit toppy. It's actually starting to struggle to break out. That says at 93.58, down 51 cents today. If there is a sudden move into the 96s, that is, it just raises the base. It says, what are you thinking? I'm going towards the left side high, which I've already tried to do. 93, what was it? What did I say it was? 99.73 was the high back in June of 2014. That would be my upside target. But until it gets there, now you can start a lot of kind of backing and filling. And that's all I'm saying. So rig, I have some subscribers who had bought it when I had it in my newsletter as a buy, and then I got taken out for a fractional loss, I think it was. But they stayed in. They liked the idea of rig being a Transocean Limited offshore drilling in oil and gas. And I said, I don't know if I would add right now. I would just take a little bit off to see where I want to put it back, because everything about it is technically good. I do have it. I could have it as an alternate count, but I'm calling it an F for now in the Chapman wave. So just be a little bit careful. And if you're looking at the weekly chart, this is still unbelievable. This is only a leg B, and it's gone from 2.33 to the recent high of almost 4.60. Was that 59 or 60? 4.58. Double top at 4.58. So, it's very near term. I'm saying 2 tops yesterday, and today's a little bit lower. So, yeah, just take a little bit off, and that's the reasoning. So when you look at this, same thing with Exxon. Exxon went even higher than we expect. But look how Exxon, with all the talk about Exxon, dividends and everything to do with the earnings, it's kind of stuck here. It's made a high of 114.66. I believe I need to check that. And it's just stuck. So in a sense, that's a good sign. And in another sense, says, momentum's running out as the MACD start to weaken a little bit. Stochastic's still good at 85%. On balance volume is a tad overbought. 9 is still very good over the 14. So it says, I would take a little bit off. I'd be prepared to put that back at a certain point and just deal with it as something that is fantastic, being one of the better sectors altogether in this particular bear phase of the market. Talk about bear phase. So in other words, rig, yes, take a little bit off and prepare to put it back. I wouldn't get too carried away. In the damn PDSB, Basil, PDSB announced positive oncology data, beautiful breakaway style gap after 1 year of pulling back, consolidating start here. or be patient. So let me just look at PDSB. Now, I had never seen this one before. Usually I recognize the symbols, maybe not always the stock names. So I did this real quickly. Monthly chart went from a peak A, B, C, D, E with an Eiffel Tower straight up and straight down. Uppercase A, it looks like, and then a really good rally, starting off with a daily at 289 on the 3rd of October. It goes to peak A, peak B, peak C, over the 200-period moving average, peak D, can't hold it, pulls back under it, peak E, pulls back, retests it, and boom, it's up. And I can say that because the tacticals are so strong, On Balance Farm says it's a tad overbought. I'm calling this F/B. My eye says it's probably going to be an F just for the short term. The weekly chart has gone to peak A, B. That's a double bottom. No. 291, 289, right? Yeah, 289. So this is a brand new leg A. Gosh, I can't believe how many leg A's have been spectacular moves in so many stocks. It doesn't even matter if it's a $2 stock or a $5 stock or an $8 stock or a $280 stock. Some of these have had spectacular 6-week rallies with their monthly charts. I'm sorry, the weekly charts still in leg A. Yeah, so I like this. I would just say at 8.18, if you have options, I would definitely take a little bit off right now. But if you're looking at positioning, while I'm going to say I personally would take a tad off, I would look at 720 to 680 as an area of support, and I'd like it to sit there for a little while, get ready for the next big move up, because what it does do is it has, my rule of thumb is 1, 3, 6 for consolidations. So this is at 2 bars after A, 1, 2, 3, 4, 5. 6 was the move up at peak B. 1, 2, 3, 4 was the peak D, and 1, 2, 3, 4, 5 was peak E, and now it's just gone 1, 2, 3, 4. It's screamed to the upside. So I think it needs a little bit of a hiatus, just a little breather here. So I'm just saying to you, I would maybe take a tad off, and I'd be prepared. I wouldn't just say, okay, 720 to 690, I'm putting money back, because that could be an Eiffel Tower straight up, straight down. So just you need to have patience. This is the kind of move where you are the person, Dan, who has the kind of patience to play these things, and you have a way of organizing either through options or through whatever trading positions you have. You have positioning so it's near term, intermediate term, and long term. So I do like it, the fact that it is running there, even though it's news related in biotech, that is a good sign. I'll be back. Dow's up 22, S&P's down 20. That was Chapman, Tiger, technician side.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so yesterday as I was wrapping up, I had a question about SGG. SGG is the Sugar Trust and it's trading at 64.50 cents. This is, so I've been mentioning this for quite some time now, that sugar in my DBA, this is the DBA Agricultural Fund, which subscribers have from the 13s. It's gone to 23, pulls back sharply to 19, bounces in a peak D in the weekly chart to a peak D and then pulls back. It's trading now at 20.0. But the reason why I mention this is, look, wheat is acting very weak. Soybeans starting to pull back after a peak D in the daily, but it's in the lower range of the halfway marker of the rectangle. Corn is at the lower end as well. And the only thing working beautifully is SB. SB is holding up the DBA, which today is trading at down 13 cents at $20. But look at this beautiful cup that goes from a U to a second U, which is how they get the word W, the letter W. And 20.47 was the high back in August or so of 2021. Pulls back to the 14-period moving average, then it bounces to 20.45, 2 cents below the previous high. It's just unbelievable how many times that's happened. And then it pulls back and it makes the second U for the letter W. It looks like a big U. And it breaks out. And here we are having a high today of 20.48. That's 1 penny above the high that was made over a year ago. So this is really good action as leg C in the weekly chart. I like the way that sugar's moving here. It's made this beautiful cup formation. Didn't mean to do that. Let me just go back. Oopsie. There are. And what we're looking at is this cup formation. I had left side. Oh, I didn't put that in. I did it in the other one. There it is. Look, left side, right side price time match. We went exactly there to the midpoint, and here we are in the weekly chart at 20.29 in leg C. So yes, it could pull back at any point, but it's only leg C in the daily. It should. I could use this as an alternate count, a phantom peak C. I just don't think I need that right now. If I can get this mouse to move, see this double top here on the 9th of November. 19.43 was the high of the continuous contract, and then 19.43 was the high of the 10th of November. Now, what I actually would normally do is I'd say, I had an inflection point right there in something, but I didn't see that. Look, the on-balance volume didn't give you a little nick there, a little pullback. So I can't really use that as a phantom peak because that's my rule of thumb, that you only use it if you have a confirmation that one of the technicals gave you the little hiccup to say, whoops, it's stalled there. And even though it's a parallel high, you could use that as a phantom peak C. What is a phantom peak C? It says that in the Chapman wave, there are specific rules. And the rules can only be broken if it's got another sub-rule to it that is applicable. Otherwise, there's no point in having rules at all. So in this particular case, that could have been an instant restart. It still might be, and that would be your D. And your D says, it might be C, but I'm calling it D because I want to be ahead of the game. But look, the MACD is good. The 9 period is way over the 14. The price is way over the 9. The stochastic at 94% is fantastic and flat. It's not pulling back. And the unbalanced volume is a tad overbought. So let's just say that this is not in place. I'm calling it a C for now. There might be a pullback, and there may be a modest leg D. And then it could test. Where would the support be? In the weekly chart, the support is always the left side high that it broke above. In this case, it was the high of the 15th of April, the week of the 15th of April, 22 at 20. Because this was a peak C, and it didn't take out this left side low, technically this should be D. So yeah, we are. Got maybe a phantom D in the daily, a leg, possibly a leg D, because those are all gray A, gray B, because it's underneath the previous high. That C didn't go C minus by going underneath the low that was made in the week of the 14th of January of 16.51. It went down to 16.71. So that's still active. So yeah, I've got to be very strict. I've got to call this a D. I have no choice. So that is a D in the weekly chart. I do like it still. Let's see what happens. The technicals are still all very good. Okay, that's CBB. So if you want to CBB, the number's there to watch. Don't type it there. Type it on. There we go. SBB. What's SBB? Pro short trust short. Oh, well, that was wrong. It's SGG. SGG. I have so many numbers from what I've done all. SGG. Yeah, this is the sugar iPath sugar sub. I don't know what it says. A trust. Anyway, it's the trust. So because it's a trust, it acts as an ETF, but it can't be an ETF because you got no stock. So it's an ETN, I guess. So yeah, I do like it. And this is a Chapman wave inside track repellent area right there, from that high to that high. Oh, it's right in it right now. So let's just see where it plays out, because so far it's acting very well. But it is overbought, and on a very short-term basis, I would say if you're along this, can't remember who asked me the question, if you're along it, you should take a little bit off right now, just money management. Next question. At BP. Oh, at BP, that is the British pound. Look at this. You've got your left side, right side price time match, and that takes you to the 21st of November to get to that high right there, which was the 17th of August, and the continuous contract of 1.217. And you're trading right now at 1.885, having made a potential peak E. Could even be an instant restart, but so far that's acting very well. Getting a little bit short-term toppy, but that's okay. Next question I had was DKNG. DKNG. I was thinking of this the other day. Son took me and my grandson to a Celtics game here in Boston. Came to visit for a weekend, and we went to the game. Talk about. I don't know if you've noticed this. You know how in all these shows where you have a singer and it's a competition or something, have you noticed even in the games, when someone holds a high long note and holds it for a long time, it doesn't matter if it's a lousy pitch or a lousy sound or anything, everybody says, yeah. Well, on Friday night, it was for the vets. There was this guy, Army Sergeant or someone, who sang the national anthem, and he held one of those a couple of times. He held long notes, and everyone went roaring, but he had a most beautiful voice. That was really something. And the game was very interesting. I always say, take me to one of those games. It's like taking a pleb to the opera. I can appreciate everything that's going on that I can understand. And those 3 pointers were just spectacular. But so we're looking at DraftKings and online gambling. The reason why I brought it up is while I was there, I thought wonder how that works. So what's going on in the DraftKings Inc. I'll be back in a moment. Basil Chapman, Dow's up 12, S&P's down 24.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Note came in, Basil, those bar symmetries are just terrific. Well, look at this. Bar symmetry. I have to eat this up. There's nothing you get to make up. Look at the left side low that was made right here in the 1 minute chart of the E-mini at 10.18. Look at the rally to a peak. Do you remember what's the objective of Chapman Wave buy signals? To go to a buy mode to take you at least to a D. Takes you to a D under the 200-period moving average, and the measurement from the left side, number of bars to the right. Folks, these are techniques that everyone is capable to do. You don't even have to. I've been doing this on naked charts, just putting an X where the target would be. And it's just amazing that if you have the correct analysis, it goes really close. And look at this. In 1 bar late, it breaks that left side low, and it goes down to the Chapman Wave inside track propellant zone. Let's see if it holds. And what I said earlier is if 69.68 support goes, based on my technique, then there's a really good chance that by, what is the time? This says by 11:30, left side, right side price time match. Now, this one is a little artistic because it's a particular candle. It wasn't the exact one. I was talking about it, why I use this particular methodology in this case. And it's in leg E, and it says at 39.60, we just hit 39.60. 6, I think. Yeah, we're looking at E, right? Oops, lowercase e on the way down. And it says by 11:30 we should test 39.60, or at least very close to 39.60. Okay, so that's part of the technique. I'm going to do it again Thursday and Friday because a lot of people are starting to say, hey, never noticed that before. And here we are. This is the Chapman Wave inside track repellent zone in UKNG. It's down 68 cents. And we'll see if it can close above 16.78 in the next week. That'll be the first sign that it's turning the corner for a good rally. Folks, stay tuned. Steve Rhodes comes up. Great programming all day. You got Steve, Thinkorswim, Larry Pesavento, Dave White, and Tom O'Brien. Check out my daily newsletter. See you tomorrow.